Hey guys, hello everyone. How are you all? Hope you all are fine. So, here I am with my next video, and this video is on accountancy. Yes, I'm going to discuss something about accounts. And this video, I will not say that this video is basically for a particular class because this is a concept. I am coming up with the very beginning part of accounts. Like, I will discuss some of the concepts first of all. Like, if you are a beginner of accounts, whether you are a CA student, whether you are a grade 11 student, or you are someone who wants to learn accounts, so I am coming with a very basic concept first of all. So first of all, when we are starting accounts, there is a language of accounts. Like, when we speak English, there are certain words which we use in English. There are certain words which we use when we used to speak in French language. Okay, so in the same way, when we are doing accounts, there are certain words which are basically used when we are doing accountancy or when we are learning accountancy. Okay, so this words you already know, but you will come to know the new names of these words in accountancy. Like, you already know the concept, but there are certain words which describes this in accountancy. So what are those words? Okay, let's see. So here the first word says dater. So like I said, you already know these words. Yes, you also know dater words. So dater are basically customers. They are the one from whom we have to receive money. Why? Because they have purchased product from us. And definitely a data take place when we do something on credit, right? Suppose if I am selling a product, I am Mr. A and Mr. B came to me to purchase a product. Suppose I am Mr. A and Mr. B came to me to purchase something, then B is my customer. Now suppose B has purchased a product and after purchasing he paid me immediately. So in that case the data will not arise because here the transaction is complete. Transaction means a particular event has been completed because on the spot the thing is purchased and on the spot the payment is also made, right? So now when the data will arise when Mr. A is selling to Mr. B but on credit, like Mr. B has not paid it now. So in that case Mr. B and Mr. A will develop a relation and Mr. B will become the customer. That means we can say the debtor of Mr. A. Like, Mr. A in future will ask money from Mr. B. So he know he is my a kind of an current asset from which I can take out money in future. Okay, so then he will become his debtor. Now exactly the opposite when we will talk about creditor. Creditor is the one whom we will pay the money. Like in the last concept, there were two persons, Mr. A and Mr. B. So when I will look from the part of Mr. A, B is debtor. That means Mr. A has a debtor whose name is B. And when I will look from the part of Mr. B has to pay money to someone. So to whom we have to pay money will become creditor. That means he is the person who is selling. Right. So in a transaction, there will be both debtor and a creditor. The creditor will be the one. He is the creditor. Why? Because he is selling. He is selling. And for Mr. B, he is the creditor because in future Mr. B will pay money to Mr. A. That means Mr. B is indebted to Mr. A. Okay, so B will say that Mr. A is my creditor and A will say Mr. B is my debtor. Okay, so this is the concept of debtor and creditor. Now I will talk something about liabilities. Liabilities are a very common concept. These are the one debt. These are the kind of debt which is payable. Like we will be paying these debts in future, right? And in future I will be suppose I have purchased a car. Okay, I have purchased a car. Suppose the EMI of the car is rupees 20,000 might be in a month. Okay, so that will become my liability because I will keep on paying money on it. Okay, so something which we are bringing, okay, and it will create a kind of debt on me. This is called a liability. That means it has become a routine payment or might be one time payment in future, anything. It is not necessary. It is when we will call EMI, then only it is a liability. Suppose I have taken an example of Mr. and Mr. B. Na? So Mr. B has taken a liability. Why? Because Mr. B has purchased something from Mr. A. So liability means a debt which is created when we do a transaction which is not on the spot payment. Okay, so this is liability. Now what is asset? Asset is something which we create, and these assets are going to work in future for us to create something good. Like suppose if I am creating a liability. Suppose I have created car EMI, but I am getting an asset also, na? Asset like car. This is a thing which I have brought in my home and it has become my asset now. Okay, so this is a kind of an product which I will be using. I will be driving, I will be going here and there. So this is called an asset. This is a kind of thing which is created by me. Okay, these are called assets. Like if I'll talk about simple, I will talk about my home, then I can say gold is my asset. If I have my own home, the building is my asset, right? If I suppose I have a Xerox machine, then it is my asset. I have a laptop, this is my asset. Okay, so these are all asset because, and one thing more, asset you can see also and sometimes we cannot see also. Like I have a good name in market, so looking at my name I get easily loan because everybody know that I have a very good business, right? So in that case this is a goodwill, this is a reputation I cannot see, but because of this reputation it is very much helpful for me, right? So in that case you can say an asset can be seen also, and you cannot, and there are certain asset which you cannot see also. Okay, so this is called a asset. Now what is overdraft? Overdraft is something which is related to bank. Okay, suppose I have 10,000 rupees in my account. Okay, and I need to pay someone 15,000. But at present, my account is showing a balance of 10,000. So, what I will do, suppose I have tried with my friend, with my father, with my mother, there is no one who can help me now at present. So, what I have done, I have gone to the bank, I have requested, please, can you give me a kind of help? So, bank agreed. So bank said, okay, you can withdraw 15,000 from us. That means 10,000 from your account and 5,000 we are giving. So all total it has become 15,000. But in future, when you will put back money in your account, suppose in future after 20 days, suppose I have got 20,000 rupees and I have deposited in my account, but my account will not show 20,000 now because they will cut the money, the extra 5,000 which I have brought. Okay, so in this way overdraft payment is done. So for giving you a kind of an help at the time you are needing, then overdraft is created in your account. That means at present your account will show minus balance, minus 5,000 balance, because you have withdrawn extra 5,000 money. And because of this help, government also charge interest from you. So there is obvious an interest on overdraft. And why government do so? Government do so because they have given you a kind of an help when you are needing. So definitely they are going to charge something from you. Now this overdraft facility is not available to everyone. Like if I am going, it is not necessary that I will get overdraft. Overdraft is given to the one who is having a good reputation. Suppose your account is having a good amount of balance, or good amount of balance, that means you can say every time you maintain a good amount of balance, you give good transactions in the bank, you are doing transactions which is helpful for the bank. In this way, if you are a very good customer of an bank, then bank agrees, and the bank know that in future I will get back the money. So at present, if I can, then bank will think it present. I know I will get back the money, but if at present if I am helping, I will get some interest also. So in this way, bank issue overdraft. Okay. Now overdraft is a kind of liability, because whenever we are taking extra money more than uh, what is in our account, we are taking out more than that. In that case, we are creating a burden on ourselves that in future I have to return. So this is a kind of a liability which is created. Okay. Now see some other concepts. So let us talk about livestock. Livestock are nothing, they are animals which we generally use when we are doing business. Like the farmers are using, suppose cows, buffaloes are giving milk, this and that. So whenever for doing business we are using animals, then we are uh, naming that animals as livestock. Okay. Capital. Now what is capital? Capital is something which we invest in our business. It is not only money. If I have a bench or table chair in my home, and I go and I went to my office which is newly constructed, and I have a brand new table and chair in my home and I shifted it to the office, in that case that will also become a capital. Okay, generally we think capital is money. No, but capital is sometime things also. Capital is the one which we are investing to start a business, to grow your business. Suppose you already have a business, so but now you want to add on, you want to grow your business. So in that case you have invested some more money in that, then also it is called a capital. So a capital can be new capital also, a capital which is addition also to the old one. Okay. Account receivable. Now what is account receivable? Account receivable is also called bill receivable, which is shortly written as BR. Now what is account receivable? Suppose, now come back to the example of debtor and creditor which I have given, Mr. A and Mr. B. Now Mr. B has said, now Mr. B is a customer. Now Mr. B has said that I am taking this product from you and in future I will give you the money. So what A has done, to remember, he has prepared a bill, and this bill he has given to Mr. B, so that in future whenever B is giving a payment there should not be any mistake of time or date. There should not be, that means there should be a timely payment. There will be a proof that in this bill the time was maintained, the amount was maintained. Okay, so there is less chances of getting confused. So if I prepare this kind of a document and I will give to Mr. B, then this will become an account receivable. That means I will call this bill as account receivable. Mr. A will call it, because this is a paper which will give him amount in future. He will receive some amount in future from Mr. B. Okay, so it is called account receivable. Now accounts payable. Same way for Mr. B, it will be account payable, because in future Mr. B will have to pay on this document. He or she will have to pay money. Okay, so for Mr. E it will be receivable, for Mr. B it will be payable. Okay, bills payable. Now, the last concept say insolvency. So, insolvency is a state where a person is incapable of paying his debts. Suppose Mr. A has started a business. Now it was running very well, but suddenly something has happened. He become financially very poor. Okay, and now he cannot pay his bank, suppose bank loan, or now he cannot give money to his creditors. Now he cannot pay anything debts on time. So in that case, we can say Mr. A has become insolvent. That means his financial condition has become so poor that he is not capable of paying his debts also. Okay, so these are the basic concept. I'll come up with some, not concept, you can say basic terms. So I will come up with some more terms. So stay tuned, subscribe my channel, tell me the problems. Definitely you will be loving commerce now, because I will make it very easy for you. Come up with your suggestions. Tell me if something more you want to know, you want me to create some videos on certain topics. Please give me a comment on that. Thank you so much.